move on and address our Monday special Midcap Mania with Nigel D'Souza. Nigel, what stock do you have on the radar?
Anuj, the stock that we're going to talk about is into ductile pipes, iron pipes. Basically, it's been a big underperformer, but I'm just looking at the fundamental performance and it looks rather interesting. Now, what does ductile pipes do? They're used for transportation of water as well as for sewage. So that's basically the background of what the company does. The company we're talking about, by the way, is Sathavahana Ispat. That's the one we're talking about. In terms of domestic capacity, the total capacity is around 2 million tons approximately. That's ductile iron pipes capacity. And in that, this company holds only around 10% of the total market cap. We have the Electrosteel Group that holds nearly around 45 to around 50% of the total market. Now, what's the total capacity that they have? They have pig iron, they have met coke, as well as ductile pipes business. That's up for you on the screen. So they were integrated. Some part of their ductile pipes, the pig iron requirement is met from there. Some part of their met coke as well is met via captive sources. So they sell some part of that as well in the open market. And that could be a bit of a trigger going ahead. The first half of the year was very good. Revenues went up by around 5%. Profitability as well did quite well. It's up close to around 130%. And margins, in fact, did come in at around 14%. That compares with around 6% on a year-to-year basis. This time around at the halfway mark, they've delivered a net profit that compares with a net loss. So that's really the reason why it caught my eye as well. And in terms of the segmental breakup as well, the ferrous products business, that's really the ductile pipes business. There, in fact, this time around, they've given a profit of around 47 crores. That compares with around 2.7 crores. This is a bit in terms of the ductile pipes business. And also the met coke. We talk about coking coal prices going up. You take coking coal and then you make coke, met coke. Over there as well, it's turned around. So it's given you 74 lakhs as a profit. That compares with an EBIT loss all across the last few years. So that's another trigger going ahead as well. The first half of the year, the EBITDA that they've done, that's what they did in the entire of last year. 81 crores is what they've done at the halfway mark. In the full of last year, they did close to around 80 crores. If you take a look at the valuation wise, the stock trades at around 5 times the EV upon EBITDA, while competitors like Tata Metallics and others, they traded around 6 to around 7 times approximately. What are the key triggers going ahead? Both their ductile iron pipes business as well as their met coke business, that's functioning of a capacity utilization of roughly around 60%. So that's one of the triggers going ahead. Coking coal prices, we've been talking about it doubling, tripling. There as well, if they have surplus capacity and a low cost inventory, that could be another trigger. And also the government of India just last week, they imposed import duty, that's dumping duty, on bringing in met coke. So maybe their capacity utilizations could move higher, particularly in the met coke business. Finally, what's the biggest drag on the company? Their debt, huge debt. I was taking a look at their interest payments at the halfway mark itself. It's at around 25 crores. So that means they're sitting on a debt of more than 500 crores. That's not very comforting. And if we just take a look at what they've disclosed on September 2016, it appears the debt is in the range of around 5 to around 600 crores. Finally, promoter holding, only around 37%, and out of that 37% as well, we do have 25% of their holdings that have been pledged, but there are other big investors. They have been sitting over there for the last few years. The likes of Stemco holds close to around 10% stake, as well as a couple of FIs, diluting the base in the last few years. That could be another sign that you should look at. Remember, they diluted stake at around 36 rupees, at around 60 rupees as well. Tried to reach out to the management, wasn't really successful, but maybe you could keep this stock on the radar if you want to play the ductile pipes business as well as the met coke business. Back to you.
Standard disclaimer, of course, not a recommendation, just a stock that Nigel has studied.